This is Concrete Numbers, where construction meets accounting, tax, and business strategy. I'm your host, George Kazarian. If you're ready to scale your construction business and master your finances, this is the podcast for you. Hey everyone, it's George here, and on today's episode of Concrete Numbers, I want to talk about receipts in the event of an audit. So nobody wants to think about an audit. Nobody wants to go through an audit. It's not fun. It's definitely a headache. However, there is a night and day difference in how a business owner can get through an audit. Okay? And the biggest key differentiator is whether you retain support or you don't. So if you don't retain support, a sample might get picked, and it's very common in a privately held business like your own, where expenses will be scoped in to see the nature of the expense and whether it has a business connection or not. If samples are selected that are not able to be supported, then those samples will be disallowed as expenses, and the scope of the audit would further increase. So it would kind of spread like wildfire. Now, the most common, sort of response or excuse that I've heard is, well, I've got bank statements, I've got credit card statements, I should be good. But the truth is, the bank and credit card statements prove that you spent the money, but they don't fully satisfy the requirements for each audit sample that would come about. And again, if something is scoped in as a sample and you can't provide support for that item, it's called a naked transaction. And again, it would be reversed as an expense deduction. Therefore, you have, more taxable income, and most likely your audit is going to be expanded. Now, coming back to my earlier point, there's two ways we go about this audit. Either everything is supported, or almost everything is supported, and you will cut through it like butter and it will go very quick and easy. Or this tends to be a behavioral thing. A lot of people don't maintain much support for any transactions, and in that case you're going to have a real problem on your hands. Mind you that transactions under $75 are automatically below the de minimis of the IRS. So if you went to, Home Depot and bought, a couple boxes of screws or whatever for $20, you don't need to keep, honestly, those receipts. Like, you could be questioned on the transaction, low likelihood, but you could. And you would just provide an explanation. I bought this, and, it was below $75. I didn't keep the receipt, and that will totally pass. That's totally fine. But you're not required to keep those receipts. So anything below $75, don't worry about it. Anything above $75, you need to keep receipts on hand. Now, the 5 things that need to be supported by every transaction are date, amount, place, purpose, and business relationship. So if you maintain receipts, that will already cover the first 3 of these 5: date, amount, and place. Purpose and business relationship, these are generally, proven in other ways. You can provide an explanation. If you have a calendar invite, if you have emails that point to both the purpose and with whom you met and all that, you'll be covered there. But those aren't as rigorous and of criteria with as high of expectations for support. Again, the way this will go down is, as long as you're able to provide a receipt, and as long as it seems reasonable, you can construe some sort of a business connection to this expense, it will pass. You'll cut through it like a knife through butter, like no problem. Now, I know what you're thinking. Like, it's such a big headache to keep, every single receipt. I buy so many things, I run through so many expenses, this and that. And I agree. I completely agree. Look, I'm on the other side too. I, run my own business, everything. A best practice I will highly, highly recommend. Okay, I don't know if you've read the book Atomic Habits, but, the author talks about if you want to make anything a habit, you need to cut down all the barriers in order for that to become like a daily habit. Like there's apps out there, Zoho, Expensify, QuickBooks, FreshBooks, they all offer their own app, Adobe Scan, you can take a picture, but I'm going to say that those are not the best ways to go about it. To have to get into the habit of opening an extra app, clicking around 5-10 steps, the app crashes, you're frustrated, you have to restart your phone, you're going to get out of the habit of storing a receipt pretty soon. I'm going to tell you what to do right now. Take a picture of the receipt with your phone. That's it. That's all you have to do. Chances are you have an Android or an Apple. I don't know what else there would be. But you would basically just, double click that side button, pull up the camera, take a picture. That's it. It's as simple as that. And then throw away that receipt. It no longer needs to physically exist with you. And the beauty of this best practice is that it will be sorted by date, so that anytime, God forbid if you're in an audit, like if it's picked as a sample, they'll pick it from either the bank statement or the general ledger, wherever, and exactly the date. And since it's in your photos, you could pull up that exact date. You can even make a little, folder in your phone, and at the end of the day, end of the month, whenever, once in a while, drag all those receipts to that folder to keep your photos clean. But I cannot stress enough the importance of having some sort of evidence or support for each transaction over $75. It will make the world's difference in an audit. Now again, we spoke about the rule that if you can't prove it, you can't deduct it. That is the general rule. However, there is one exception, and it's called the Cohan rule, and it dates back to the 1930s. Cohan versus Commissioner, where a taxpayer didn't have support for a lot of his expenses, but these were ordinary expenses in his line of business. They were expected. I'm going to say this is not an easy one, okay? If you don't have receipts, if you don't have bills, invoices, whatever to support the transaction, there is the Cohan rule. It does not apply to travels, meals, entertainments, or gifts. For those, you need to have receipts or logs, regardless. For the Cohan rule, the IRS and tax courts allow you to take as a deduction certain expenses for which you don't have support that are legitimate business expenses, that there's a reasonable basis for supporting that expense or for having that expense in your business, and also you made a good faith effort in trying to find the support for that expense. But it's not that easy. At that point, you're at their mercy, and that's not a position you want to be in. And again, it doesn't apply to travels, meals, entertainment, and gifts. So at that point, you can expect a lot of reversals to happen. Now, what you can and can't do if you are missing support in the event of an audit. You can try your best to gather whatever other evidence you can. It could be, in addition to the bank statements, it could be emails, call logs, calendar invites, mileage logs, any sort of like evidence, text messages, what have you. You can try to write a contemporaneous log that documents, that day, what happened, give as much reasonable support as you could. You can ask vendors for copies of, receipts if they're able to provide it to you, if they're willing to provide it to you. And you can try to show that this is consistent with your historic, pattern of doing business. But again, none of these are perfect, and you would have avoided a lot of back and forth headache and all that had you just taken a picture of that receipt. What you can't do, you can't fake receipts after the fact. That'll be tax fraud. And that's about it. That's my number one recommendation to you is as soon as you have a receipt over $75 that's business related, just take a picture of that receipt. It's as simple as that. Take a picture and you're done. I hope this has been helpful. Hit like, subscribe, turn on notifications so you don't miss any tax updates. See you in the next one.